Hello and welcome to this episode of Financially Speaking, the conversations powered by India First Life. I'm your host, Dr. Snigdha, for today's podcast. The main reason behind opting for a life insurance policy is to provide cover for one's family. However, it is equally important to be aware that this also provides a good tax benefit. Saving the taxes is one of the most dear point of discussion in offices as well as amongst businessmen. And to understand this clearly on how life insurance can help on saving the taxes, I've reached out to Mr. Nalin Bhandari. Mr. Nalin Bhandari is Senior Vice President and Head Finance Controller at India First Life Insurance. He has a rich experience in finance of more than 20 years. I welcome you to the podcast, Nalin.
Thank you, Snigdha. Yes, saving the taxes is the most important subject across all working professionals. Even better, insurance tax benefit can give you immense savings, which can be further reinvested to grow your wealth.
Amazing. Let's get started. So, what type of tax savings are eligible for life insurance policies?
So, the tax saving can be broadly classified into two parts. One is deduction and second one is exemption. For claiming deduction, we need to refer section 80C of the Income Tax Act, which says कि you can claim maximum up to 1,50,000 rupee for the premium that you are paying on your life, on your spouse's life, or on your dependent children's life. The life insurance premium or life insurance policy is one of the investment instrument available in section 80C. One more thing that you need to notice, this premium you have to pay out of your income. So to understand this better, for the same insurance premium, both husband and wife can are not eligible to claim deduction under section 80C in the same financial year.
Understood. So, are there any specific details of these tax benefits that one must remember?
Yeah, thanks to the IT department that they have introduced two sections for life insurance product. One 80C and secondly 80D. In case of ATC, for your ULIP endowment products, whatever insurance premium you are paying is eligible for deduction under section 80C. In case of ATD, that is available for health insurance premium. But even in case of life insurance product, you can add health related rider, that is critical illness rider, in your term insurance plan, and you can claim ATD benefit in addition to ATC benefit.
And then, what are the tax exemptions?
Yes. Similar to the tax deduction, the tax exemptions are available under Section 1010D of Income Tax Act. And these exemptions are available in with certain conditions.
Okay, and what are those conditions, sir?
Yeah. To understand the condition better, we have divided the condition into two parts. One is sum assured related condition and second one is premium related condition. The first condition related to sum assured needs to be checked in each and every life insurance policy. And what is that condition? So as per section 1010D of the Income Tax Act, the ratio of sum assured to premium must be 10 times of the annual premium. So to understand it better, let me take an example. Suppose someone is paying 1 lakh as a premium annually, then the minimum sum assured should be 10 lakh rupees. It can be more than 10 lakh rupee, but it can't be less than 10 lakh rupee in our example to claim the benefit of section 1010D. So Snigdha, tell me, suppose you are paying monthly premium of 10,000 rupee, then how much premium will you pay annually?
So, in a monthly premium of 10,000, I will be paying a premium of 1 lakh 20 lakh.
Right. Yes. 1 lakh 20,000. Yeah. And to comply with 1010D condition, what should be the minimum sum assured?
The condition related to the sum assured is minimum 10 times of the annual premium. So in this case, as the annual premium is 1.2 lakhs and 10 times of 1.2 lakhs is 12 lakhs.
Superb, Snigdha. You have understood it correctly.
Thank you. In the earlier conversation, you have also mentioned that the second condition is the premium related condition is dependent on the type of the product. Can you please explain this further?
Yeah, as I mentioned, some assured related condition needs to be checked for each and every life insurance policy. Second condition is related to premium related condition, which came with certain date. So, for ULIP policies, government has introduced with effect from 1st Feb 2021 a restriction of premium up to 2,50,000 rupees. So, in this case, in addition to first condition, you have to check the total premium you are paying for all the policies issued on or after 1st Feb 2021 must be less than rupees 2,50,000. Similarly, for non-ULIP policies, government has introduced with effect from 1st April 2023 a maximum cap of rupees 5 lakh rupee. So in this case, if you are paying premium less than 5 lakh rupee, then only you are eligible for section 1010D benefit.
Uh, Please help us with an example to understand this better.
Yes. So to understand this example, let's take an example of ULIP policy. So we have chart out the steps to be checked. As I mentioned, some assured related condition needs to be checked for each and every policy. So in case of ULIP policy, you need to check whether policy is satisfying the criteria of 10 times. Let's take an example of rupees 1 lakh rupee. 1 lakh rupee annually you are paying premium and sum assured is 10 lakh rupee. So as step 1, it is satisfying the conditions of sum assured. Okay. Then you need to check whether this policy is issued before 1st Feb 21 or after 1st Feb 21. In this case, let's take an example of after 1st Feb 21. So first condition we have satisfied. Second condition is, what is second condition? Premium should be less than 2,50,000 rupee. In this case, we are paying premium of 1 lakh rupee. Then we are satisfying both the condition, sum assured related condition and premium related conditions. So this policy is eligible for 1010D benefit.
What about the non-ULIP plans?
Yes. Let's take similar example and follow similar steps which we have followed for ULIP policy. In case of non-ULIP policy, as I mentioned, you have to check sum assured related criteria for each and every policy. Suppose policy is issued on 1st of June 2023, that is after the date. In this case, a policyholder is paying a premium of 7,50,000 rupees. Okay. And sum assured is 75 lakh, that is 10 times. So in this case, you are satisfying the first condition of sum assured, that the sum assured should be 10 times of the premium. So 7.5 lakh is the premium and 75 lakh is the sum assured. But second condition is the premium should be less than 5 lakh rupee, which is missing in our case. So this policy is not eligible for 1010D deduction.
I would like to raise another question here. So, is the premium related condition related to per policy or total number of the policies?
Good, you have raised this point. The criteria of rupees 2.5 lakh or rupees 5 lakh is not per policy, but sum of all the premium paid on policies issued after the date as mentioned in our earlier example. Let's take an example. In case of ULIP, suppose three policies of 1 lakh each is issued after 1st Feb 2021. In this case, the person is eligible for only two policies out of three policies. because once you add the third policy, it will cross the limit of 2.5 lakh rupee. So first two policy or any of the two policy are eligible for tax deduction, and third policy will be taxable.
This is so detailed. And are there any exceptions to note to these above conditions?
Yes, in case of death claim, which is exempt in all the cases, irrespective of the fact that policy is satisfying the condition laid down in section 1010D or not. The condition which we have discussed for 1010D need to be satisfied in case of maturity claims and in case of surrenders. So in case of death, yes, it is fully exempt whether your policy is satisfying any or either of the conditions of the 1010D.
This was really helpful to get such a clear idea about saving taxes on life insurance policies that we all purchase. Thank you so much for your time here today, Nalin. I'm sure our listeners are now very clear about how life insurance helps them to save the taxes.
It was pleasure to discuss such an important aspect of life insurance, and I hope I have helped you to gain better understanding on saving taxes. Thank you, Snigdha, for your time.
Thank you. And to all our listeners, thank you for listening. You can find more such episodes on YouTube and on your favorite podcast app. Keep listening.